You're getting close to buying or selling a home, so what are the market conditions that you're about to walk into? In this video, I'll give you the picture that I've pulled from several different sources and different viewpoints. I'm Schumann. I'm a realtor here in the Minneapolis area, and I make videos to help people that are thinking about making a move to Minnesota and they have all the questions in mind. So if you have even more questions than I've actually managed to answer in this and my many other videos, I'm always happy to help you if I can. This week I looked at the MLS to pull some data from there. I also looked at reporting from Axios and a snapshot from a transaction coordination company that shows us what successful offers are looking like right now in the Twin Cities metro. In a nutshell, inventory is increasing, but the market still favors sellers. Why did I say is the market softening? I'm going to talk about that at the end of this video, so stay tuned. In this graph that I pulled from Axios, you can see that the median home prices continue to rise across the country, and we are no exception here in the Twin Cities. However, the median home price nationally is $53,000 higher than it is here in the Twin Cities. So yay us. Listen, I don't know how that's even possible because we have low inventory here and we have a really high quality of life. So I don't know why people aren't banging down the doors to get in. Let's keep it between you and I. Anyway, I think it's a bargain. Here in the Twin Cities metro, we have a low inventory of single family homes, but in particular, ones that are in the median price or lower. Once you hit that price point that's up over about $700,000, there are more options. And if you're looking at new construction, you have even more choices because builders are now catching up. And we have almost a 6-month supply worth of new construction listings. However, the median price on new construction is significantly higher than the median on single-family homes. That price is at $566,000, which is higher, obviously, than the median price on previously owned homes of $396,000. The variables between this number and Axios can be the month for which the data was pulled. I think they are using May, I'm using June, as well as what they are considering as the metro area. My numbers and graphs are all based on the 7-county area. I think the new construction supply is really the main factor driving why the outlying counties have a higher month supply of housing inventory overall. They are getting close to seeing 2.5 months worth of available homes to sell. So just a refresher, if you're not familiar with this, between 0 and 5 months worth of homes available to sell if nothing else were added is generally considered a seller's market. If we have 6 months, it's pretty balanced, and more than 6 months is considered a buyer's market. Axios states that sellers have been waiting to sell, sometimes for years at this point, because they are waiting for interest rates to fall. Why do sellers care? I'll tell you in a minute here. There's a lot of pent-up demand on both sides of the equation. There are people that want to get into a home and people that would love to sell a home. And both of these groups really become buyers at the end of the day. They're all the same because sellers are going to need to buy something else and will be in their buyer's shoes shortly. So do they have the money at the new higher interest rate to even buy an equivalent house? First-time buyers in particular are able to get a lot less home with the interest rates as they are now. And really, right now in July, we are in the heat of the busy season here in the Twin Cities, and with that high demand comes even higher prices. Axios reports that sellers get a 2.3% premium on their home if they sell it in the summer. This is interesting because in the Twin Cities metro, we're seeing something of a conflict with this idea of it being the busy time. There was a big downward shift in the number of homes that closed in June as compared to May. So that makes me wonder if Jerome Powell at the Fed is finally starting to have his way with the real estate market and that things are going to slow down quite a bit right now. Things do seem to be shifting a little bit, softening a little bit. If he does lower the interest rates, though, I do expect that to dramatically reverse. And Axios made this point in one of their blurbs. I agree with it wholeheartedly that if there is a downward tick in interest rates, we're going to see the equivalent of a spring market happening no matter what time of year that is. If you look at this graph, you can see the slowdown as we head into December when the prices achieved are at their lowest. That's thanks to demand being the lowest at that time as well, because people seem to be intimidated by the idea of moving in winter. But if you are a buyer, this can be a great time to get as close to a deal as you're likely to get. Lastly, let's look at the way that winning offers are structured. Lots of good signs for buyers here. I want to add a caveat again on this. It's just a snapshot. Good houses with good photos that are prepped, priced well, in a good location. Those are still getting multiple offers in the first weekend. All right, so fewer people overall are choosing to waive inspection, and I think that's great. I think it's great for buyers, and I actually think it's great for sellers too. And listen, great for agents, because I don't really want to have any liability problems on my hands. Buyers are paying just about 100% of asking price, not huge amounts over, as we saw when we had super low rates. Fewer buyers are offering escalation clauses or offering to cover appraisal gaps, which makes sense, assuming that the house is priced properly and the seller is getting about asking price. Then you would not pay over, would not need that escalation clause, and would not also need an appraisal gap. More home warranties are being paid for by the seller, and more homes are going under contract contingent on the buyers selling the home that they're coming from. So those are all signs of a softening market. It's not so hard to the seller's advantage anymore. Things are easing up a little bit. All right, I think that really hits the main points, but what are you wondering about? Put a question down in the comments or reach out if I can help you with anything. I love to talk to people that meet me on YouTube. Thanks for watching.